Welcome to the top news briefing. We are kicking things off right now with major market movement. Today, the U.S. market opened higher following the latest jobs data, and we are diving deep into how chip stocks are rebounding across the board. We look at the specifics of this powerful market opening right now.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we shift focus to the energy and geopolitical landscape. We examine the sharp rise in U.S. stock futures as chip makers rebound, all while navigating renewed tensions between the U.S. and Iran. Find out how this conflict is impacting global oil flows and what investors are really betting on for the future. Now we turn our attention to the broader market shifts. We see the S&P 500 dipping as chip stocks give up some of their earlier gains, and we explore the specific struggles faced by companies like Intel and ARM Holdings amid the uncertainty surrounding U.S. Iran peace talks. This is a major market correction we need to understand. Finally, we wrap up with the full picture. We review the overall performance, including the strong performance of NVIDIA and Microsoft, and what the economic data tells us about the Federal Reserve's stance. Don't miss a second of this essential analysis. Stay with us for the rest of the broadcast. The U.S. stock market experienced a positive opening today, driven by strong jobs data and a notable rebound in the chip sector, according to reports from the Economic Times. The market opened higher, signaling investor confidence following the release of key employment figures. Furthermore, specific stocks within the semiconductor industry have seen a significant surge in value, indicating a positive sentiment surrounding technology and manufacturing sectors. Analysts suggest that the combination of robust employment metrics and the strength in chip-related stocks is providing a favorable backdrop for broader market performance in the coming trading sessions. Investors are closely monitoring these developments as they assess the impact on corporate earnings and future economic outlook. U.S. stock index futures surged on Friday, driven by a rebound in chip makers that helped mitigate concerns stemming from renewed U.S.-Iran tensions and anticipation for the upcoming jobs report. As markets looked ahead, major indices continued their upward trajectory, with the Dow E-minis gaining 119 points, the S&P 500 E-minis rising 30 points, and the NASDAQ 100 E-minis adding 166.5 points, all trading near record highs. Earlier in the session, investors had paused activity in semiconductor stocks, which had rallied significantly this year, benefiting from a robust spending boom in artificial intelligence infrastructure. Chip stocks stabilized on Friday, with microchip technology seeing a 3.1% per market rise after projecting first-quarter revenue above estimates, fueled by strong demand for its industrial and automotive chips. Qualcomm jumped 4.8%, and NVIDIA rose 0.8%. These gains helped overshadow geopolitical risks in global markets, as clashes between U.S. and Iranian forces in the Gulf region dampened hopes for a swift resolution to the Middle East conflict and a gradual reopening of the Strait of Hormuz, a vital transit route for oil and liquefied natural gas. Oil prices climbed above $100 a barrel. Analysts caution that the resumption of oil flows is critical, stating that continued equity market gains depend on tangible progress regarding the Strait of Hormuz reopening. Despite inflation concerns, the S&P 500 and NASDAQ have reached new highs, supported by a strong earnings season, signs of economic resilience, and optimism surrounding technology and AI sectors. Looking ahead, the Labor Department's employment report, scheduled for 8:30 a.m. ET, is widely expected to show non-farm payrolls increasing by 62,000 jobs last month, following a rebound from 178,000 in March. The unemployment rate is projected to remain steady at 4.3%, indicating labor market stability. Experts suggest that a strong employment print could push expectations for interest rate cuts further into the future. money market futures indicate traders anticipate the U.S. Federal Reserve will maintain interest rates steady within the 3.5% to 3.75% range until year-end. In other market movements, Cloudflare shares fell 17.5% following announcements regarding workforce reductions and lower than expected second quarter revenue forecasts. Trade Desk slipped 13% after forecasting revenue below Wall Street estimates. CoreWeave dropped 6.2% after raising its lower end of the annual capital expenditure forecast due to rising component costs. Meanwhile, online travel platform Expedia declined 7.6%, citing the impact of the Middle East conflict on demand. The S&P 500 experienced a downturn on Thursday, as technology and semiconductor stocks retreated from recent gains, while geopolitical uncertainty surrounding U.S. Iran peace talks dampened broader market sentiment. Intel and Advanced Micro Devices both saw declines, with ARM Holdings shares dropping 10% amid concerns over supply chain security for its new AI chips. The PHLX Chip Index, or SOX, lost 2.4%, marking a reduction in its quarterly performance. Despite these sector-specific dips, major AI heavyweights like NVIDIA and Microsoft continued their ascent, both rising over 2%, reinforcing investor confidence in the artificial intelligence sector. The overall S&P 500 closed down 0.4% at 7,335.96 points, with the Nasdaq declining slightly by 0.15% to 25,799.74 points, and the Dow Jones Industrial Average falling 0.55% to 49,638.38 points. The market's rally has been fueled by a relentless surge in technology and AI shares, positioning S&P 500 companies for potentially their strongest profit growth in over 4 years. Supportive economic data, including lower-than-expected unemployment claims, has also eased economic anxieties. Investors remain focused on upcoming non-farm payrolls data this Friday, following a strong private payrolls report earlier in the week. Traders are maintaining expectations that the U.S. Federal Reserve will keep interest rates steady through the year, citing a resilient labor market and elevated energy prices. Cleveland Fed President Bate Hammack echoed this sentiment, anticipating a steady rate environment despite ongoing uncertainty. In other sectors, cybersecurity stocks surged following a strong earnings forecast from Datadog, which saw a 29% jump, alongside gains in peers CrowdStrike and Palo Alto Networks. Conversely, the home appliance sector faced headwinds, with Whirlpool slumping 13% after missing sales estimates and suspending its dividend. Oil prices also saw a slight dip, falling 1% to bounce off session lows. Overall, the S&P 500 saw declining stocks, outnumbering rising ones by a 1.7 to 1 ratio, despite recording 18 new highs and 10 new lows for the index. The S&P 500 concluded Thursday in a downturn, as a notable retreat in chip stocks, particularly from Intel and other semiconductor firms, weighed against broader market uncertainty stemming from U.S. Iran peace negotiations. U.S.-listed shares of ARM Holdings experienced a significant drop, as concerns regarding its supply chain for new AI chips overshadowed a strong earnings outlook. Intel and Advanced Micro Devices both declined, shedding some gains made earlier in the week. The PHLX Chip Index also saw a reduction in its quarterly gains, trimming its progress to approximately 46%. Despite the sector-specific dip, investor confidence in key technology giants remained robust, evidenced by gains in NVIDIA and Microsoft, underscoring continued enthusiasm for artificial intelligence. This rally reflects a relentless surge in technology and AI shares, which has propelled U.S. stocks to record highs, driven by strong demand signals and robust earnings season forecasts, with S&P 500 companies positioned for their strongest profit growth in over 4 years. Economic indicators have also provided a supportive backdrop. Upbeat economic data, including lower-than-expected claims for unemployment benefits, has eased some concerns. Investors are currently awaiting comprehensive non-farm payrolls data on Friday, following a strong private payrolls report on Wednesday, where jobs increased by 62,000 in April, up from 178,000 in March, according to economist polls. Traders are maintaining expectations that the U.S. Federal Reserve will hold interest rates steady through the year, citing a resilient labor market and elevated energy prices. Cleveland Fed President Bate Hammack echoed this sentiment, anticipating the central bank will maintain a steady rate environment despite ongoing uncertainty. In contrast to the tech strength, some areas faced headwinds. Whirlpool slumped after missing first-quarter sales estimates and suspending its dividend, while cybersecurity stocks like Datadog, CrowdStrike, and Palo Alto Networks gained following earnings forecast raises. The overall market saw declining stocks outnumbering rising ones within the S&P 500 by a 1.7 to 1 ratio. The S&P 500 finished the session with 29.46 points loss, settling at 7,335.66, while the Nasdaq Composite fell 32.75 points to 25,801.2, and the Dow Jones Industrial Average dropped 313.34 points to 49,597.25.